Good afternoon, everyone. I hope everybody's enjoying their long weekend and 4th of July. You can find me at Solstice ATR, Instagram, Twitter, and remember, this is for illustration use. We're not a broker dealer. Past performance doesn't indicate future results. We use adaptive algorithm in order to give us the signals with no biased opinion to either side, other than trade what the charts gives us in front of us. Okay. Let's first start by taking a look at the overall market. We split it into a couple of groups and we go step by step, and eventually I'll give an evaluation end of the day where we are in relationship to what the outcome can be coming. Okay, let's first start by looking at the combination of the three instruments, the S&P, the Nasdaq, and the Dow. I don't have the Russell here. One small reason, the canary in the coal mine is usually my first indication of a move up or a move down, and it usually starts the reaction at the beginning. Last week's, it was a little bit, technical. We were a little bit afraid that the market's not going to continue higher because the tech sector, there was a little bit of rotation in it. Small cap was, range was the Dow to the upside compared to the S&P and the Nasdaq 100. As we can see, we have recovered 100%. We continued higher. We do have a couple of events that has happened, and we're going to break it one by one. We're going to go from weekly. We're going to go time frame, daily. We're going to go to 6 month. Instead of weekly, we're going to go to a daily, and we're going to push OK. We can see that the combination of the three is, spiked up above that 53,000, and we cleared that area. Let's first of all go down with this canary in the coal mine slash RTY. RTY is the IWM, the small cap in the industry. We can see it since February of the beginning, that last push higher. We have been range bound in the last February, March, April, May, and now we finished June. We're going into July. So we have to keep an open mind that the Russell has been range bound, and it's going back and forth until it resolves itself above or below this range. The most important thing we can see on Friday, the candle was lower than the Tuesday, but we stayed inside the prior week's range, a little bit on the negative side. Keep an open mind that the 2300 is a very important number, or if we clear the 2335 area to continue back up, or do we fall back in the range of the 50 simple moving average, the 116 in the backside of this channel on the Russell. Let's take a look at now the Dow Joe Industrial Averages, YM or DIA. We can see that the Dow Joe Industrial Average was range bound back and forth since May, and eventually it tried to look up, fell back down. In the last week or so, it has climbed back up, and it's trying to continue, and it's got a little break at above this channel. Does it break last month range from high to low? You can see my 61.8 where it is a support, 50 and 38.2. I do not have the weekly. I just have the weekly fib, but I didn't anchor my 3 days, 4 days here. We can anchor one of them later on the S&P to show you how to do that. We can see that there is continuation unless we lose the 38.2 in the Dow. Let's take a look at the Nasdaq NQ. We can see that the technology sector has quite a bit recovered from the last week's range on the continuation, and such as Google, Amazon, Apple, Netflix, Microsoft, PayPal, Shopify, Meli, Moderna, Nvidia, Lulu. So you can see that things have changed in the Nasdaq. Does this mean that we're going to continue higher? Keep an open mind on inflation. Keep in mind on the bonds, as well as the gold sector with the VIX and the dollar. As we can see, we have, 2 days consolidation. Tuesday was a push up. Monday was a push up. Then Wednesday, Thursday was an inside day of the Tuesday range. And eventually on Friday, we broke out and we created an annual high for the year on the Nasdaq. So remember, we are far away from the 18 simple moving average and the 50. The most important thing that the Nasdaq has continued higher, but we have to keep an open mind at the 14,450 and 500 to see if it does hold or not. I know we pushed up into the 14,700. If you're going to pay attention, you'll pay attention to last month's range. The 14,600 is important in the Nasdaq or the QQQ. Let's go to the /ES. And we can see that the ES has continued very nicely. It's been grinding in the last 5 days, continuation higher. And on Friday, it had a nice breakout. And the most important thing I want to show you here, that we do have 2 small gaps. I'll come back to them on the volume profile, and I'll show you how to look at them. We can see that there was a gap here from the prior week, and then we had another gap on Friday in this range. The gap is between the 43.1825 and 43.12. And the second one, the gap is between, I didn't anchor them nicely, but you can see that the 42.50 and the 42, as you can see, let's go back to it. It's about 42, 43, 44 area. So we have to keep an open mind that this range is still these 2 gaps on continuation higher. Our monthly fib was this area here. We have broken above it. We have to keep an open mind on it if it's going to continue or not. So that's very important. Let's now go to GC. And I want to put GC up first before I do crude and before I do Bitcoin and crypto. Gold is GLD. As we can see on the 6 month, it was trying to go up in that linear regression channel to break up. That was the linear original on the weekly. We broke up and we created a new high. So I anchored the new one to the top and we fell back in range. Very important. If gold's going to spike up, we have to see the 1,810 clear and 9,800 in order to continue higher. If it stays slanted and we end up losing the 1750, 1745, keep an open mind because this was the consolidation before the last leg up. You can see it here. We are in this consolidation. Does this mean it's going to continue higher? We can go look at 1987, 1984, 1990s when gold was at the high and eventually it fell back down due to the fact there were, inflation in the market did continue higher and the commodities lost, 16, 17%. I am not looking at history. I just look at what the facts are and I try not to predict or look at the history and say this is going to happen. No, we trade what the charts gives us in front of us. So we are range bound until we clear the 1810 or we lose the 1750, 1740 area to see what gold can do. Let's take a look at CL. The price of crude has increased quite a bit. We can see in the last couple of days on Monday, it was a down day. Tuesday was an inside day of the Monday range, which is this candle here. Then eventually it had an inside day on Wednesday. Thursday looked up and Friday closed above the Thursday's range. Does this mean it is exhausted? This is our monthly fib. Does this continue or not? We have to keep an open mind where the market is on crude oil. Let's take a look at now, or you can use USO as an ETF. We're going to look at BTC/BTC. The ETF is GBTC for crypto. As you can see, Bitcoin, since the 63,000 I had mentioned it in April, it has fallen down. This is a partial gap fill, which it didn't fall. You can see that bigger gap. Eventually it filled portion. Then we fell back down here. We couldn't consolidate. We couldn't clear the 50,000. Eventually we fell lower. That 41,400, 350 is very important on crypto or Bitcoin in order to continue higher. We do have 2 ranges. As you can see from the gap, I connected this dot with this one here, the lower high, to show you that we are in a linear regression down channel. Then I connected that 30,000. You can see we retested a couple of times. We went below it. That was the annual high here on that fib. You can see it's coming from March 14, 2020 till 1/2/2021. So we can see that was the high. Then eventually we pushed up. We came back in. We are in a smaller linear regression in a symmetrical triangle. In order for Bitcoin has to clear this area to run up. If it falls below here, it'll look back down to the backside of the channel. So be open mind to look at GBTC as an ETF if you cannot trade the futures of Bitcoin. Let's take a look at Ethereum, ETH, and we can see Ethereum is in a similar situation. That 2300, everybody's looking at that 2000 area as important, 2185. This is important area for me. If it cannot clear this area and clear this down channel that I have on the computer, that the computer drew, and it cannot come back to the upper linear regression channel that I have here in order to go back in the upper wedge, it's very important. Then you look for the backside of the triangle, which would be around the 1465 area in Ethereum. So we can see that since the gap, it consolidated, fell down, tried to push above the 3000, couldn't make it, fell back down. It's trying to test the 2300. This is a very important area. If it doesn't make it, look for the backside on the other end where the consolidation was and the breakout of this area, which is around 1960 if it doesn't hold or if it does. Let's go now. Taking a look at a couple of ETFs. What I want to do is first start with the bonds. You can use the TLT or the EIF. That's the TLT. You can see now it's starting to nickel the price back up because interest rates has to stay lower for the Federal Reserve policy and the global markets in order to keep everything under control because they are printing more money. You keep an eye on the TLT. That's a longer 20-year notes. But if I look at the IEF, it says 7 to 10 year. You can see it's doing the same thing, and that's the fib on IEF. I have it right up there in front of you, and we still have not cleared this area of this consolidation here. It retested it. If this is the rounded bottom, this is the cup of it. Does it break up to fill this gap here? And this is why I use the IEF. Let's take a look at the technology sector, XLK. We can see that the XLK, we can see those the gaps in the Nasdaq. You can see those areas where we gapped up and continued. If you are trading the ETF, which is or the QQQ, pay attention to the technology companies, and we are far away from the 18 simple moving average on XLK. Let's take a look at XLV, which is the healthcare sector. We can see that it broke out, similar situation. We can look at XLF, the financial sector has come back down a little bit. It's trying to make a decision in the financial sector to see what the interest rates are, what the government's going to do for the banking sector and as well as the brokerage firm. Let's take a look at XLE, which is the energy sector. We can see that the energy is consolidating. We have to pay attention to where we are. I'll do USO just to give you a little bit of background on it, which is the sector for actually crude oil. This will show you where we are in relationship where the oil is. It's on an annual high. What I'm going to do is take a look at SCHB. This is broader market of the Schwab Strategic Trust for overall broad market ETF. We can see that the overall market has continued higher. We do have a couple of gaps in it. We can take a look at that as well in the Schwab. We'll take a look at SCHX. I never brought that up before in my videos. You can see it as well. It's in the large cap sector. We can see that large cap are coming back in favor. It doesn't mean that they can continue. Pay attention to the overall market. And let's take a look at what can we do? Okay, here we go. I'm going to do one more ETF, JNK, Berkshire Hathaway. You can see the Bloomberg overall market has, because of the Thursday push down, Friday pushed back up, because this is more of a general overall market. And the NYA, I like to use the NYA composite because it represents majority of the exchange on the New York Stock Exchange. Like the Nasdaq, it only represent, or the QQQ or XLK represent those 100 companies. This one has a broader range other than the S&P 500, so it gives you an overall look on the market, and that's why I'm putting the NYA in there. If we look at the XLP, which is one more, this is the spiders, consumer staples. We can see we fell back down. We're trying to grind back up. We reached the 50 Fibonacci. If you take a look at the 68.72 to the high, F5 is my 50, and that's 61, and I have the 50 SMA right above there as well as the 50, and we are holding the 18 simple moving average, which is the colored one right here. Last but not least, I will do XRT. I hope they have it. Okay, they do. Spider Share Trust retail. As we can see in the retail, we were we've been range bound since March, and eventually we're kind of grinding back up. Pay attention to that. Let's take a look at some equities, and I'll go back to the ES and finalize the volume profile. AAPL, we can see that Apple climbed higher. Amazon did the same thing. GOOGL did similar thing. NFLX was a little bit weak on Friday. It came back in a little bit, but continued higher. Tesla had grinded back higher, and we can see it's been range bound in the last 5 days. Pay attention to Tesla because it's an electric. I consider it's more of a computer software company than what it is as a car manufacturer. Because if I look at Ford or General Motors, you can see that they're consolidating. GM is trying to get as well consolidation right here. X, you can see the steel industry is a little bit, under pressure. The semiconductor, we can take a look at the semiconductor. I can look at SMH, then we go to the ES. You can see that the semiconductor has continued higher, and eventually we broke these 3 tops on the annual chart high. If you consider these 1, 2, and that's the third one, we eventually have looked above the annual high on the semiconductor industry. Let's go back right now, take a look at the ES, and I'm going to change the candles a little bit because I want to change the profile on it, and I want to go to a faster time frame to show you what we can go in the style. Instead of using those candles, we're going to use bodies of a candle so we can see the volume profile. And I'm going to go inside my study, and I'm going to put the volume profile right there. I'm going to highlight it, open it up, put the volume profile, push OK, because on the daily it does show. It doesn't show. What I'm going to do, go from daily, go to intraday, and on one day we're going to go 20 days. Instead of 1 minute, we're going to go to 1 hour, and we can see the volume profile in relationship to the overall market. I'm going to start from my left to the right before we continued higher. This was the prior week when we fell down. We consolidated. We were thinking that the market could continue higher because it was exhausted. I'm going to take those 2 days where volume ran away and continued higher on a grind before we can move to the other one. If you can see, this is from last 2 weeks ago. That was the Friday, the 18th is in 618, and this was all over the weekend, 620, where the volume looked below. Then we eventually broke up and continued higher. What I want to show you, this is a POC. This is the value area low. This is a value area high. So if you can see, when we looked up, we continued higher. This is the value area high, which we have never revisited. We continued higher, and the POC is sitting around the 42.08, 42.010. We continued higher ever since. So we have not revisited this area. If you can see, the following day we had a higher POC. We continued. I'm going to zoom in a little bit and come back down. Then we grinded higher. You can see that consolidation slowly continuing higher. So I'm going to zoom down now, and we're going to do it from this area here. You can see this is like a virgin control point, which was never revisited. That's a POC. We're going to take these last 5 days, then we do the last 5 on this one for the week before. So we can see that we grinded higher. We continued higher. This is a gap, professional gap in the profile. Since this happened in the overnight action, this is a virgin control point. We looked up, continued higher. Then we grinded sideways. We retested the POC, continued higher. We retested the POC and continued higher. On this right side where the 75 area is, that's a virgin control point which has not been revisited. So the profile has a value high, a value low once again, and a POC. If I go to the right side now, all the way to the right, I'm going to zoom down a little bit so we can get those last 5 days. This is Friday, Thursday, Wednesday, and Tuesday are the same. And this is the Monday range when we were grinding higher on the S&P 500. We can see that this is a permanent POC, which has been 2 days in a row, never revisited. We never retested it. We looked in the overnight, we continued higher. Then we have this gap here. As you can see, I have a shadow, and this shadow is between the 43.18 and 43. Let me look at it. 43.12 area. We got to pay attention to it in case we come back in. So the most important thing, this is our monthly high, 43.05.75. It is very important that you do pay attention in case we do revisit it and we come back test the 50 SMA or the 18. So if I zoom in here, the most important thing, we have developed kind of developed 3 value areas on Friday. This is a push up, another profile, then another one higher. This is the value high, value low, and this is my POC because it has shifted higher. But around the 2300, I said 2300, the 4300 and a quarter, it's very important area that we do hold, and we do hold the 0575. So trade what you see. I hope this was helpful. If you have any questions, you can look us up. Give us a thumbs up at Solstice ATR, or you can DM me on Discord, or you can find me under the capital CHRISI, capital FARAH on Twitter. Over and out. Enjoy your 4th of July weekend. Take care.